Hey guys, welcome to another edition of the Trade Genius podcast. Bob and Phil here as always. We're going to talk a little bit about the state of the economy as far as investments go and new cash coming into the markets. And then we're going to show you probably one of the scariest charts I think Bob and I have come across with regards to what's going on under the hood. I know we've shown you guys a number of them. This one takes the cake though, so you're not going to want to miss this. So let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
Hey Bob, awesome day in the room again, and another down day. I think the impending slide lower is just kind of gradually unfolding here. But you had an interesting find here on as far as like venture dollars coming into the system on this chart that you dug up. Can you tell us a little more about that?
Yeah. So what's really happening, Phil? I think it's important for people to understand is that, and we talked about this yesterday, and there's a number of companies that just have no cash flow. Okay, and there's companies with cash flow but no prospects, and then you have the pipeline coming in is drying up, and in fact a lot of these companies that are getting funded or they're not funding them anymore, so they're going to start rolling over. And this is what is showing here is that the venture capital market's getting wiped out, and so the front end is gone, the financing engine is ending, and the economy is going into a recession, so the cash flow from operations are going to fall. It's setting us up for a lot of pain here. And you know, we've been talking about everybody scratching their head as, well, Bob, why isn't it crashing yet? Phil, you keep saying it's going to crash. Well, the chart I think Phil's going to show you is how they're hiding and how much they're hiding their losses from the general public. Remember, in 2008, they had to take those losses, and then they changed the FASB rule, which is the Fair Accounting Standards Board. Okay, and basically saying unless you sell this thing or unless they go out of business, you don't have to take a loss, which is absolutely insane. You know, the transparency it's opaque, and we're putting ourselves in a situation where they're shoving Fetterman in the closet and saying he's doing just fine. And so, Phil, I'm going to throw this to you, and I want you to show this chart and just people just. You may want to take a Xanax before you view this one.
Yeah, so here it is. Unrealized gains or losses on investment securities. There's a zero line there. So obviously, if you're north of that zero line, that's a gain, unrealized gain. And if you're south, it's an unrealized loss. And you can see the severity of the situation here. Okay, so this is basically on investment securities as reported by the FDIC. So this is people that are insured by the FDIC are reporting to the FDIC so that the FDIC has some idea of the cataclysm that they're dealing with. It's really severe here. I mean, we were talking about maturities or held to maturity securities that are getting down toward the negative 700 billion in unrealized losses. Go look at 2008. All right. You guys understand what 2008 was and how that played out eventually. And you had week after week after week of selling as we got into the final parts of that bear market. But look at the situation here. So this is very scary because not only are we like 8 times worse off or 7 times worse off than we were back in 08, you know, we're in a situation too where this market really hasn't even gotten into the teeth of what we would consider a bear market, which is where you start seeing week after week of going lower. What scares me about this is that these at some point you have to post the collateral that you need to take care of these losses. And if we're already at almost 700 billion here when we're just under 4,000 SPX, imagine what's going to go on when we start dipping down toward 3,500. This starts to get real fast. And that's why we are warning about the potential for once we start going down this slope, it gets slipperier the lower you go, and it just starts to compound on the way down.
Yeah, and the point I want to make with this one too, Phil, is that these unrealized losses are sitting at banks, guys. Okay, and especially if they're illiquid like this. Usually if it's stocks, they have to mark to market, but these are things that were purchased, and if they had to sell them today, this is how much they would lose on them.
Right.
And so they're not selling them, but the cash flows on them are drying up. So at some point, when they have to start disposing of these, this is what happened in 2006 to 2008.
Right.
Commercial real estate, residential real estate kind of went underneath.
Right.
And then once they had to start unpacking these things and unwinding these things, is that they had to start selling their stock portfolios off. So it's just a hot mess. And they've been holding off, waiting for the Fed to pivot and pause, or pause and pivot, I guess, getting it the right order. But if they don't pause, or if they pause for a long time and not pivot, it's going to have to unwind, because people are getting gated now to the hundreds of billions of dollars. If you're in a real estate fund, they're not letting you get out of your investment. You're in it for the long haul. It's not like buying, a stock ETF or a bond ETF where you just go in and close it off. You go ahead and you request your cash out, and they look and say, no can do.
Right.
And you're going to stay with us until we dispose the assets. Oh, by the way, we may have to dispose of them at a loss. And guess who's eating that loss? You guys.
Yep.
So, and it's not just the banks that have collateral issues. Just say you use this as an asset to the bank on another investment you're in, and that investment starts to go south.
Yeah.
And you can't get out of this one.
Yep. That's the domino
this
effect.
Is a big problem, guys. And
Yep.
And I don't think people realize that's why we just been screaming at you guys. There's icebergs underneath this ocean right now, and we're cruising on the Titanic here at full speed.
Totally agree. So, like we said, just got to be hedged. Make sure you've got some sort of protection, even if that means being in cash right now, and even in your 401ks and things like that. Like we've repeatedly been saying, till the dust settles and things look like they're firming up. So anyway, thanks for watching, you guys. Really appreciate when you guys are chiming in. Also, really appreciate your comments, and let us know what you're doing to protect yourselves for more downside. Love to hear about that as well. And also be sure to check out our newsletter at tradegenius.co/newsletter to sign up for that. Other than that, we'll see you on the next video. Thanks for watching as always. Take care.
Trade Genius.